Hey, if you ever let a trade go against you because you stay in it too long, you want to listen to the tip we have coming up at the end of today's video. Hey, this is Dennis Wilburn, the Active Trend Trader, this time for On the Radar. If it's the first time you've seen us on the YouTube channel, please subscribe, hit the bell, leave a comment down below about what you think the market's going to be doing and or what you're trading. Be glad to take a look at any stock you're trading. Today we're going to cover the three indexes I follow, the NASDAQ, the Russell, and the S&P. Plus we'll take a look at a couple of stocks that may be setting up. The market's doing a little bit of a sell-off today. And last but not least, the tip at the end. So let's get down to business and jump into today's session. Okay, let's kick today off looking at the S&P first. We're just a little bit before the market actually closed, and so price action, it probably is not going to move a lot from where we are right now. We're about 2 minutes out. What I'm looking at is, one, we've got a nice turnover. TSI daily chart crossed over to the downside. Market forecast is crossing down to the other downside also. However, still above the red line. That's the 80 plus 80 level. And as long as it stays above that area, we have to consider things are still in a, the momentum is still in the upward direction. Do we need a healthy pullback? You betcha. And as we covered earlier in the week, is that we're anticipating a pullback where? Back to about the 20. And we said that when? We said that when the 20 was way down here and price actions was way up here. What is happening is the market, the moving average has continued to move up. Price actions have moved down. So there should be some kind of an intersection, a collision between the two, the price action and the moving average. That's where we may, and again, emphasize may, hit a place where we could get a reversal, where price action starts to flatten out and get ready to move back up. We can always throw a new, now that we have put in a new high, let's go ahead and get rid of this Fibonacci here. Let's get rid of this Fibonacci and just draw another Fibonacci in there. There we go. Now let's take a Fibonacci from, you can take it from one or two places. You can take it from this low, because this is a qualifying low, or this low back here. Let's go ahead and take it from this low here to see where prices may need to go. I'm going to take it from the high to the low. There we go. And as you can see, as we throw in and put in our magic fib box, our magic fib box is over here. And what is defined as the magic fib box is the retracement to the 38 retracement down to the 618 with the 50 in the middle. That would be an idea place. The breakout level is within that little zone. So until we get price, there's the bell, until we get price action down into that level, momentum is shifted to the downside, both on the TSI and the market forecast, until we get a momentum shift back up to the upside, along with a reversal candle. Look for this to continue to plod lower. This just provides us an idea of where it may turn around. There's a high probability that we'll pull back 50% or even a little bit lower and then rebound from there. But the potential trade in SPY and the S&P does not become attractive until we get down into those levels. Could we stop before we get there? Sure. Could hit the 20-day moving average. Give you a 20-day moving average. Get my finger up here. There's a 20 right there. It could stop there. And but we'll watch. We could basically overshoot a little bit. Like I said, I like at least the top of the magic fib box. So that's what we've got going for the S&P and or the spiders. NASDAQ, a little bit more of a sell-off. Had some we can do the same thing here. We can now eliminate the fib from before. Doesn't mean that it's not in effect. It's just that we have newer data to base our analysis off of. Low there. I'm going to do it the other way this time. Low there, high there. And when you draw your fibs in this way, what it does, it gives you your downside trajectory. Where's the downside target? If we break through the magic fib box, which is, show you where that's at. Magic fib box on this one is about there. And sometimes what I'll do when price action is wandering around that, I'll go ahead and extend that out for several weeks and or even a couple of months. And you'll be surprised how price action just kind of meanders around there, comes down, it hits off, it goes up. But again, that provides us at least an idea of where a potential target could be. As you see, again, the breakout area here, that's that dotted purple line, coincides and drops right inside the magic fib box, right inside it. So how do you alert this? One, put in an alert at the top of the fib box, or maybe a nickel outside of it to the upside, and then a nickel above the 50% retracement, and a nickel above the 618 retracement, which is there. There you go, 618. Again, not a lot to write home about. The TSI rolled over, market forecast rolled over, TSI rolled over and crossed. Now, if we break below the positive 42 level, that can be indicative. You just look to the past. Look what happened last time that happened, which was here. Prices continued into an extended pullback. I won't call it and a short-term downtrend. And so if we, in fact, and again, go back, look at what happened in the past to get an idea of what may happen in the future. We had a sell-off for several days. Looks like about 7-8 days sell-off, break down, hit a new low, and then at a former, basically where we broke out of before, rally attempt failed, drop back down. So we had a one down, one up, down, the zigzag pattern, down, up 3 or 4 days, down, up 3 or 4 days, down again. This time, the going back down to the past lows failed, and we bounced up the other side. Anytime you get where you have more, 1, 2 pullbacks like this, be watching. If the next pullback fails, in other words, fails to get back down to the past low, it's a good indicator, or you get to the past low, but your momentum indicators are showing that you may be having a positive divergence. It's a good time to start looking at, maybe a time to start getting a little bit involved in that particular entity. Am I trading QQQ to the downside yet? No, not on the first pullback. Now, once we get down and we settle on where we're going to bounce from, then I observe that bounce very closely. What kind of a rally attempt will it be? If the rally attempt fails, that's where we want to be basically, putting a trade on at that point to trigger to the downside. Good stuff, huh? Okay. Russell basically had a absolute fantastic breakout. We broke above the trading zone that we were in since January of this year. We broke above it. So what is happening? We are pulling back into the breakout area. Now, what happens when we get to the breakout area, which is about the 234.53 area? We will wait and see if, the last, we have to, again, look back. What happened the last time TSI crossed to the downside? Well, it was here, actually. It was just a pullback. Could this just be a pullback of a few days and then a bounce higher? We shall see. Of note, and what is of interest is it's this zone right here that we're interested in. Is that where we will basically find a place to bounce? Or, because if I throw on a fib, just a straight low high fib, where's that pink spot? And this is all done by eyeball, guys, right at the 50% retracement area. So that is a strong level of support for IWM. We blow through that, then we're probably going to go back down and test 227 level. I'm still looking for, for our premium members, we've got an order in to buy some TNA, but our order to buy TNA is quite a bit lower from where it's at, because as I stated in our autopilot pre-flight checklist for the ETFs, if we did get a sell-off, I'm anticipating a sell-off to overshoot and tag off some of its lower level of support, and that's where we're planning our current trading trades, as off the lower levels of support, not the higher. What's kind of driving the market down today? Well, they came out with not interest rates, but the inflation came out hotter than expected. It came out in some areas about 10%. I know that, I don't know about where you live, but I know where I live, we are, having a significant level of inflation. Everything from gasoline, and I've heard on the mainland, gasoline is up anywhere, 50 to 55% above where it was January, in the first part of January this year. And it looks like it's continuing to want to go higher. Just, there's a lot of, just from a policy standpoint, there's a lot of things that just don't make sense for from a perspective of trying to keep inexpensive energy. And I realize there's a lot of dynamics, a lot of inertia going on there, a lot of different beliefs about whether we should be using, fossil fuels and not, and all that type of thing. But it's absolutely crazy that the price of oil has gone, or the price of gasoline has gone up over 50% for most Americans. But also in other areas, because of supply issues, that kind of stuff, up 10% inflation. That's, is it going to be transitory like, Jerome Powell thinks it's going to be? Are we going to get out of the inflation? Are we going to get out of inflationary nature by letting Janet Yellen just print more money? More dollar bills? Yeah, that has not been a thing that has ever reduced the level of inflation. So that's where we're sitting with the IWM. Keep an eye on what happens with the weeklies. Again, we broke out. However, let me blow this up just a little bit for us. And I tell you what, I'm going to take the fibs off. I'm going to take that fib off. There we go. And clean that up just a little bit so we can see the weeklies. And if we drop just a little bit more on this week's, like if we drop down to the 235 level tomorrow, or between now and Friday, and it closes at that level or lower, then what we'll have is we will have what's called a dark cloud cover, which is a bearish reversal signal on a weekly chart, which could be a negative sign for the markets. As you can see, the momentum indicators weekly still pointing to the upside, still not, nothing is crossed on TSI. However, it looks like it may be slowing down just a little bit. If you're wondering why I have stochastics on there, I'm doing some studies on stochastics, on some things I learned over the weekend. Always remember, sharpen the saw. Sometimes on momentum indicators, sometimes it's a good idea to have, 2 or 3 as points of confirmation. And some of them show a little bit better, but bottom line, price action is king. That's where we make our decision. Here's a couple of stocks that I'm looking at. TWLO. Okay, TWLO has now confirmed to the downside. As you remember, I think it was last week, we had a hanging man on TWLO here. Price action could not get much above 216, 217, and it kept going, and in a downtrend, and we finally broke loose to the downside with a little bit higher volume today than the past day. This was a big sell-off day. That is nasty. That is something you don't recover from all that quickly. But we had a recovery back up to the midsection of the midsection of the gap down. Now we're continuing down to the downside. if I was to be trading, and I would look at doing this, if I was going to be trading TWLO with either a bear call or a bear put spread to the downside, I would be looking at taking a trade. That's a little fat. Let me get a better picture of that. I would be looking for a pullback into the midsection of today's candle. That's still too fat, guys. One more time. There we go. And let's get another color besides that pink. Right there. Oh, that's much better. About the midsection. Any pullback midday into that section would be an excellent place to go ahead and take a spread trade. And what I'd be looking at, what is that level? I'll give you a number on it. Okay, that's the 302 level. And on TWLO, let's go out about, okay, it does have weekly options. And let's go 1, 2, 3. I'm going to go out 3 weeks from now and see what kind of, yeah, got fairly good open interest there. And so I'd be looking at what I say there. That's the 302. So I could do the 305 or even the 300. Buy the 300 3 December put, sell the 295 put. Right now, that particular trade where it's at right now could be, if I bought that, what would it be? About $2.55. But again, I would be putting it in at the middle of that trade. So it's got to go up another $5 or back to about 302 and do it there. So I should probably be able to get into that particular trade at, I would, here's just an estimate. I'm not doing the THEO value on this right now, but I would think about probably about $1.80 or so I could get into that trade. It's a $5 wide spread. So that's one. I wouldn't necessarily want to buy the call itself or the put itself. And the reason for that is it, even if I was up $5, let me give you $5 as of tomorrow. What I'm doing is I'm just basically, as of tomorrow, the value of that would be about $10.92. So it would cost almost $1,100 to buy one contract. And for a lot of people, that's a little bit steep. That's why doing the spread oftentimes makes it a lot more doable for folks with smaller accounts. And so that's what I'm looking at with TWLO. Now, what's the other one that we're looking at? Well, the other one we're looking at is Square. Square is finding support at a former level of support. Now, I recognize this is one big butt, a head and shoulders kind of pattern. If it breaks down below this, if it breaks down below this low by 10 cents or even 50 cents, that's 222.92. So if it dropped down to 222.44, I would not want to be in a trade on this. However, this also sets itself up very nicely for in this case, I think a bullish trade to bounce back up towards the moving averages. As you can see, we don't have a full reversal yet, but we're getting down into the level where TSI should be getting ready to reverse. I do have a bullish reversal. I have two right here, a two-line cluster on the market forecast, which is oftentimes followed within 1 to 4 trading periods. In this case, it would be days with a reversal, but it can reverse from lower levels. Not quite, but close to an inverted hammer at the end of a downtrend, which is a bullish reversal. And then again, while I'm not watching while I'm actually not watching where we go, the stochastics, it is also reversing from its lower level. So it seems like on this particular one, the momentum is looking like it's starting to shift. Price action hasn't caught up with it yet, but SQQ, like I said, let's see where it goes tomorrow. And again, let's see. Hold on just a second. What I'd be looking on this one, even first thing tomorrow morning, just pick up a 232 by 235, and that would be a call. And I'm looking at 26 November, and you can actually pick up that $2.50 spread for about between 85 and 90 cents, and therefore leaving you about $1.60 worth of profit. Of course, I would take the profits off as it moved up, and I got 60% of the profits, and I go ahead and get out of it. On the 26th, the expected move on Square is plus or minus $15. Plus or minus $15 from where it's at right now would take us up to about 245, which you can see is just below the 200-day moving average, which would be a perfect place, and the other moving averages would be down about that side. So that's where it would potentially run into resistance. So if it does reverse and bounce back up, bingo, we're in on that. Again, if it falls below the 22.92 level, I would put a stop down at 22.44 and just buy back, sell that call spread at that level, because it would mean, hey, I'm going to drop even further, so just get the heck out of Dodge. So that's what we got going on with Square. So as I promised in the introduction, that I would basically give you a tip. One of the things that oftentimes traders have an issue with is they stay in a trade too long. Part of it is because you don't have a plan for what to do if a stock or an ETF that you've purchased doesn't move in your direction. How long do you wait? A lot of times people do not include what I call and this is what the business calls a time stop. In other words, it's a amount of time that you allow for the price to move in the direction you believe your analysis was saying it was going to move in. Oftentimes, most traders will utilize a 2-week time stop. In other words, if I get into a trade and my stop loss is not hit, however, I have not hit my profit target number 1, which for me is 10%. If I haven't moved 10% within 2 weeks, it's time to say, you know what? This trade is not working. This entity is not working. Let's fire it and move on to something that wants to work, So 2 weeks for a straight ETF and or stock. What about options? Options are a little bit more tricky because of theta, option value goes down as time goes on. So let's assume you bought enough time and you're out, somewhere 3 to 6 weeks. I would say, part of what I do is I go halfway. In other words, if I have bought an option that's good for 3 weeks, I'll go at a week and a half. Have I moved? Have I hit my stop loss, or have I hit my profit target number 1? If I have not done either of those, and it's just kind of meandering and lingering around where you purchased that, the value of that option is going to be down a little bit, but it's better to go ahead and just close the position out. Again, that was a week and a half on a 3-week options. If you're going to be in 6 weeks, well, I'd be looking at 3 weeks. If I haven't moved positively in the direction that I had analyzed it should move in, because on the majority of these, both ETFs that I trade, the index ETFs and the sector ETFs, if they haven't moved 3 to 4 to 5% within just a few days, then something is amiss. Either I mistimed my entry, or just the market is not, heading in that direction quickly enough. Therefore, it's a lot better just take it off the table. You've conserved your capital. If you were profitable in the trade, you may want to take a look at it and say, you know what? I'm going to go ahead and take just this small amount of profits in it, and that's fine. So you preserved a little bit, you preserved a little bit of profits and also some capital. So if you like that tip, hey, leave me a note down in the caption or down in the comments section. If you're joining us on Instagram, hey, like us, share us, send it along to some other trader that you think could benefit from the tips that we're going to be putting out on the radar on a weekly basis. And again, as we said earlier in the video, if it's your first time joining us on YouTube, hit the subscribe button, hit the bell. You'll be notified when I post either new tutorials and or new market updates. So let me know what you think about this new format. Aloha. God bless everybody.